Hi guys, Harry Yotis here, professional trader for 20 years. Started my career in 2005, still going strong in 2026. Well, so far, the first 2 days of March have been very, very volatile and crazy. Okay, we're talking about here, this candle right here on the chart of the S&P 500 daily. This is March 3rd, Tuesday. Okay, it went, I don't know if you guys can see it, but there's a huge wick right below this key level of 673. And the reason for that is war inflation fears, okay? Everybody thinks that because, they might shut down the Straits of Hormuz, a key gateway for oil coming out of the Middle East, that inflation is going to spike because if oil goes up, everything goes up. Okay, so another negative thing to kill this market. Okay, we're going to get to that shortly. First, let's talk about the technical picture. Still neutral. Guys, I know it's been very, very volatile, but we're still stuck within this range for the past, I don't know, 3, 4, at least 3, 4 months. Okay, since let's say November, could be more. Very, very volatile, very, very choppy. But technically speaking, we're still in neutral territory. All of this bad news, it feels like I've been going through a crazy, like 10-hour long movie for the past 2, 3 months. And the market's basically where it is. Nothing really has changed. All negative news keeps hitting it. Market is still resilient. I'm telling you, there's some underlying strength in this market. It's just that bad news keeps hitting it. That's it. Bad news keeps hitting it. It's resilient and comes right back. Okay, there is some underlying strength in the plumbing. Trust me on this. Okay, but technically speaking, just looking at the technicals, we're still at neutral. We haven't broken down yet. We tried. We undercut it like I was suspected we might. And then we're coming back big time, okay? So neutral on the technicals, we have the fear and greed index back to fear. Okay, we were close to extreme fear as we hit the lows. I don't know, will we get there? Who knows? But a lot of the sub-indices there's still some strength in the breadth. But everything else now is at extreme fear. Volatility now is extreme fear. Safe haven demand, junk bond demand, put call options. I'm sure more puts were bought. So we have here a situation where as we undercut it, we had the VIX, okay, the fear gauge, go up, spike right up to this key like 28 level, 28-ish level, because as you can see, we've hit that level in the past in like mini crises, and it's rebounded, and it's held. So it really hit that and came back down, which is great. I love to see that. I hope it turns into one of these candles where, like a lot of these exhaustion candles, you see them up and then go down. This red candle especially, this one. So it doesn't have to be this way, but for me, I am thinking that this is like a top in the VIX, close to it. Maybe it doesn't have to. We can still keep going higher. In order for this to be a top in the VIX and a bottom in the market, I want the SPY to finish higher tomorrow, Wednesday, and Thursday. Even if we finish around here, in the middle of this chop zone, this is very bullish to me. Okay, so the technicals, neutral, sentiment, of course, fear. We might dip to extreme fear. I don't know, but we're looking for a good buying opportunity, okay? So we have choppiness and fear here, which is the opposite. I'm looking to buy, okay? And I did buy some stocks, gold stocks specifically. Yesterday we had some macro that I forgot to mention, which was very important, okay? And the macro that we didn't talk about yesterday was the ISM Manufacturing PMI. And that came in at 52.4. This is 2 months of expansion in the sector. Okay, we haven't seen that in a long, long time. It's usually we were under the 50 in contraction mode since 2022, going down. Now above 50 means for 2 months straight, the manufacturing sector of the U.S., which was a perennial laggard, is in expansion mode. So this is bullish. So the macro is still not breaking down. This is all fear due to the war. Okay. So that's good for the macro. So let's move on to the main event, inflation fears. What do we mean by that? Well, the headline for CNBC, which is basically the news, mainstream market news, the Dow closes down 400 points after falling 1,200 as Iran conflict volatility continues. If you go here, it says Iran live. Trump is going to because of the Straits of Hormuz closing, a lot of insurance companies weren't willing to insure ships going through the Strait of Hormuz. But Trump comes in and says the U.S. will do that. So he's trying to alleviate this inflation fear due to the war because oil is going to spike. So if you looked at oil throughout the day, you see that it spiked up, U.S. oil. Okay, it spiked up all the way to $77 a barrel, went all the way down to 70, and it stayed in the middle at 74. It's still above, still very high. However, still in a downtrend. War with Iran, World War III, is not enough to bring it to all-time highs. Okay, or like above $100 a barrel. We're at 74. So maybe this war is not going to last as long as people think it will. Trump says it will. Who knows? Okay, but Trump is trying to alleviate these inflation fears. Okay, so we looked at oil. This is gonna. I covered my short here yesterday, but I'm still not really ready to pull the trigger on oil right now. Okay, so we saw that the oil get hit, and of course gold down too. Okay, this is the one that was crazy. Gold down while the world war is happening. It's crazy to me. This to me is a buying opportunity. If you can see gold, it touched the $5,000 psychological level and rebounded. I bought some gold juniors around here, and I bought some silver as well, some silver miners. Okay, check out my X page. You'll see exactly what I did when I did it. Okay, and literally I was looking before the market opened as gold was down to buy into the gold space. I was just waiting for a time to do it, and I bought a bit when it hit the 5,000. I think this inflation narrative is overblown, like everything else, and the fundamentals for gold are much stronger than that, and they will continue to go higher. However, in the meantime, we could have some extreme volatility, and we did, and thank God for that. It allows you to go longer. Okay, so you have oil, gold, silver is the same story. Silver got beat up too, bought back also. Although this is not close to the highs like gold is, this is sort of churning around these levels. Okay, so we are still waiting. I bought some Hecla. Hecla was took a beating as it approached the bottom of this channel zone. I bought a call structure. Okay, a little bit too complicated. We'll get into that later. But I'm trying to tell you guys that this fear for me is overblown because I see underlying market strength, and it was a time to add. Okay, we also had the dollar go up because safe haven demand. I don't know. I guess gold isn't a safe haven, but if there is inflationary pressure, that means that the Fed will not cut rates. So they probably might keep them steady or raise them, which gives strength to the dollar. Higher rates are good for the currency. It strengthens the currency. But if you look, the dollar, even though the past 2 days everybody says the dollar is getting stronger, it's still caught in a range. Just normal volatility within this big channel here. Okay, and I'm still bearish. The dollar. Just like with gold, okay, it still hasn't broken anything. It's still relatively above the 5,000, staying at highs. Okay, the opposite story is for gold. It's still just a little bit rebound, staying at lows, not really going above the 100 level and staying there on the Dixie, the US dollar index. So we have gold staying well up above 5,000. We have the dollar still sort of in a bearish, or it's bearish overall because it's down, but it's caught within a channel for the past exactly, 6 months around. So I'm still not bullish the dollar, and I'm still not bearish gold. No way. These are just normal fluctuations within their general trends. Okay, so that's why I'm still holding gold, I'm still holding silver, and I added some precious metals here. So you have all of these things, all of these factors that I'm mentioning are all linked together. Okay, you have the VIX spiking up to a 28, okay, which might be exhaustive. If tomorrow we go up, I'm very, very bullish this market. If we finish positive for the next 2 days in the market, I think we sustain a weeks-long rally. Okay, it depends on what happens. It depends if we finish high. If the market continues to go down, it's possible that SPY could continue to, go below here and undercut and get into the extreme fear, which that would be a great buying opportunity. But it doesn't have to. It can keep going up and staying within this pattern. So all of these things, I'm looking for VIX to reverse. And with that, you're going to see the Dixie, quote unquote, strength diminish, evaporate into thin air, go back down to the lows. You're going to see US oil or oil, even Brent oil. But you're going to see oil come back down to $65 a barrel. And you're going to see gold and silver bid again. All of these things are going to be unwinding as the VIX goes down and as the market goes up, which is, I suspect this is happening because I'm telling you, this market under the hood is very, very strong. It just has had a plethora of negative news attack it. And it's still standing relatively close to the highs and being bought up quickly when it, quote unquote, penetrates levels, because this is a bear trap. This wick right here, right under the 673 support zone, is a bear trap. So more people got short as this move happened here. Okay, especially technically driven funds like CTAs or momentum chasers. Okay, a lot of people got short here to be trapped eventually. But we have to see tomorrow, Wednesday, and Thursday up. I'll be much more confident that the market is going to go to much higher if I see, and this downtrend is over for now, if I see the next 2 days up. Okay, and look, one more thing that I'd like to bring up before going away for you for the day is Bitcoin. Bitcoin is like still staying at lows. Bitcoin should have been destroyed after this. It just shows you that it's consolidating at lows and it's washed out. The negativity is washed out. The sellers look to be exhausted. None of this negative news is really affecting Bitcoin. Bitcoin is basically down like 1%. Okay, barely gave up what it made up yesterday. So it's consolidating at the lows. You would expect this to go really, really down if the market was weak. Okay, really, they would be selling this first. Okay, so Bitcoin, I'm still happy with that. And I just think it just shows you that it's like a portrait of the underlying strength of the market and the complete washed out nature of Bitcoin that I think we might go higher. So let's reiterate, guys. Technically speaking, neutral, still within this zone, still within this chop area. We tried to get bearish, tried to get people to go short. They did, and the bulls kept buying it back. We have close to fear. We didn't get to extreme fear, very, very close to fear. We could get, that doesn't have to, okay? But this shows that a lot of people are already positioned already positioned in the fear camp, i.e. buying a lot of puts, protecting themselves, etc. We also had, so that's good for us bulls. We also have the underlying strength of the market. All the internals are being bought despite massive bombardment of negative news upon negative news upon negative news in the past 2 months, my God. And yet it's still resilient. And we forgot to mention this macro event yesterday, which is the ISM Manufacturing PMIs expanding for 2 months in a row. This is rare. Okay, could be a turnaround for the sector, which is great for the market. Okay, and the big news, of course, the inflation fears. You saw oil. Okay, oil rip and then pull back down. Okay, but then finish in the middle. Okay, still strong here. Still breaking up above this key 65 level, but it's done that before going down. Okay, because the overall fundamentals of oil, absent this war, are very, very bearish. And Trump said that he's going to insure tankers so that the free flow of oil will not be stopped. So that's why oil might go down again. But you don't know. It all depends on how long this war is. Is it going to be a protracted war? If not, I'm going to maybe do a little video on that. I have my thoughts on that, but they're pure speculation. But it's too long to get to right now. We had the Dixie strong for 2 days. Everybody said King Dollar's back. I don't think so. It's still stuck within this range. Doesn't look that big. And the one thing that we forgot to mention here is the U.S. 10-year yield. I want to bring it up now. Look, the past 2 days, everybody's saying, oh, yields are spiking. Buddy, they're still 4.06. They went from 3.95 to 4.06. That's nothing. This is not a yields spiking type of move. This is not a real inflationary fear type of move. Okay, so this is why I don't think this inflation fear thing is going to have legs or bite. Okay, because the yields will be showing it to you. The 10 years basically spiked up to 4 and now back down. Spiked up to 411, back down to 406. Nothing really changed. The yields are still on the downward pattern. Okay, so again, gold bought when it hit the 5,000 a little bit. Still on an uptrend. Silver, same thing. I just think this is consolidation. You have violent moves down. Yes, they are violent. That's what it's meant to do. It's meant to scare everybody away, but it's still there. So that's it. Guys, if you like this analysis, like and subscribe and leave your comments below. But then again, I really like the strength of this market. It could get we could get a retest here to the 673. I don't know, but I'm looking for positive movements in the market in the next 2 days. We've had so many bad news and it's recovered. I think that if we get no news, it goes up. Okay, so that's it, guys. Looking forward to tomorrow and the rest of this crazy week and the crazy beginning to March. Yes, it's true what they say. March comes in like a lion. Later.